I just want to kind of get a take of what you make of the market action that we're seeing in the pre-market today. Kind of a wild week. NVIDIA earnings beat expectations, but the stock still fell. And then we saw the major indices the next day actually go higher. Kind of interesting there.
Yeah, it's a good question. And I think, honestly, that's what investors are trying to sort out as well. There's a lot of different narratives in the market right now. What was interesting to me was prior to NVIDIA earnings, your option sentiment, which historically had been incredibly bullish ahead of every earnings, really wasn't. It wasn't bearish either, Frank, but it was just, sort of in the middle, sort of Goldilocks, like lukewarm. And to me, that was telling in and of itself, because I think that's a little bit about the positioning of how many people have already jumped into the pool.
How do you see today shaping up? What's your WEX word of the day?
So my WEX word of the day is cross currents. I think, that's sort of where we are right now. Obviously, PCE is going to be incredibly important. I think NFP in the next few days as well will be crucial. And I think those cross currents are going to determine the narrative of the market. I think we're sort of in this kind of muddle through period until, we get the next earnings cycle, until we get the next Fed. And people are asking, not necessarily what the Fed will cut or not, but how much. And I think that determines a lot of the trades we have seen, like small versus large, value versus growth, mega cap tech versus everything else. They'll all hinge on these critical data points.
So you're mentioning how much. A lot of people are talking about whether it could be even a 50 basis point cut. I think that's what you're talking about compared to a 25 basis point cut. We had GDP come in stronger than expected. We have PCE coming up. Do these two reports, do that influence, or will they influence the Fed in your mind when it comes to a 25 basis point cut or a 50 basis point cut? For example, if we see PCE come in hotter than expected, does that change what the Fed in your mind might do?
Absolutely. And I think that, that's what we mean in some ways about how these data points have become more and more critical. And we certainly see that in derivatives, because when you kind of look at the term structure, when you look at the tenors of these specific dates, for instance, you really see a hump in implied volatility, which is telling you that the market is really, really focused, on these specific events as something that could really catalyze a different narrative. And I think, how much has become the question, because essentially Powell's taken the other question of will they or won't they off the table.
So, as we talk about how much is really being the question, I want to talk to you about something. Generally, we kind of get to our picks later. I know one of the things you've been talking to us quite a bit about this year in particular is downside protection, and kind of like meh sentiment when it comes to downside protection. Has that changed at all after NVIDIA earnings? Has that changed people's view of the idea that the markets actually may decline, or we might see some more volatility or possibly a correction?
It's super interesting, Frank. I would say it started to change after you got that early August drawdown. So, you had that VIX spike hit almost 60, 50s. That started to make people very nervous. And although we've sort of round tripped, when you look at the VIX handles right now, you're back into the teens, people have relatively short-term memory, I think, when it comes to volatility. And so the fact that we were able to get to those levels has kind of, implemented a little bit of nervousness. So we do see that put wing pick up, meaning we are seeing hedges come in. But at the same time, there's sort of two camps. There are people who are a little bit more worried, but there are also people who think it's still steady as she goes. And so we are seeing both volatility owning as well as selling and an increase in hedging.
All right, so it sounds like still people aren't that, they're not really going out there looking for that downside protection right now. What does that tell you about the strength of the market, or the idea that it may be getting frothy? Again, the Dow hitting a new record, the S&P still within striking distance.
Yeah, look, from my perspective, hedging is still relatively inexpensive. Of course, I've been saying that for quite a while now, and the market continues to rally. But there are, just so many events that could change which direction the narrative goes, not in the least U.S. elections, which will come up later this year. And I do think that, there is interest picking up in hedging. But again, it always takes some sort of drawdown for people to remember, hey, maybe I should be protecting my position given where the market is going.
We talked to you a lot about options. I just want to get one broad market take from you. We had Matt Maley on earlier today, and I'm going to show a chart here. This is tech and the S&P equal weight since Friday, of course, Jackson Hole. We see the S&P equal weight up about 1.5% or 1 1/3%. Let me be fair. Tech down almost 1%. His thesis is that if tech continues to decline, that would actually stop the rotation, because he thinks the general indices, the big indices, would decline as well. Do you agree with that idea, that the rotation depends on tech being able to hold up at least to some degree?
It's funny you say that. This is something we talked about actually earlier in the year as well, and it was simply under the tagline "How the meat is made." It's really about the math of the market, and the problem is when the math of the market is 6 or 7 names, Frank. It's not rocket science in the sense that the S&P is going to trade down, the Nasdaq is going to trade down if your heavy hitters trade down. I think what you need to have happen is the AI story has to be intact. It can't suffer a serious drawdown and have the overall market be up. And I think that stays the same for the rotation as well. Yes, the rotation can happen. You can have greater breadth. You can have more of the equal weight names do well, but you can't have the mega cap tech, just absolutely get hammered because the math of the market does not work out when that happens.